Good morning, UPB from OptionMillionaires.com. It is Wednesday, November 20th, 2013. Let's start with Solar City, which was down almost 8% on Tuesday, collapsing. And if you look, what really makes sense here is a pullback to this level here, this purple line. You bring that all the way across. We close this gap up that we had back at the start of October, pull back to this level, continue to the upside. So that's what I would look for Solar City. You can see the moving average is just starting to roll over. We're not even completely in oversold territory like we were back in the late summertime, end of August, start of September, before we started to rocket higher. Solar City's story is not done yet, but a pullback just like we saw with Tesla. Tesla's pulling back significantly. Broke below this 135 trend line. Let me just extend that line out there. And you can see that's probably the target we're looking at for a bounce short term here, up to that $135 level. And I think ultimately it's going to move back down to about 110, the minimum of 115. But I think before that happens, we're going to get a bounce up to 135 and back to this 110 level before resuming upward momentum. This will be a $200 stock in 2014, and the dip buyers will be rewarded. How about the S&P 500 ETF, the spiders, SPY? You can see we pulled back 2 days in a row, folks. The markets should be closed today. They should just close the market. Not allowed to have 2 days of red in a row. It should be prohibited. But you can look, and I brought this up in my video I did earlier in the week. You can see these yellow circles that I brought up, all of these pullbacks, all of these V-bottoms, starting really in November, the Abenomics low, I bring it up every video I do. Beautiful V-bottoms and a W-bottom here back in the end of August, and then we had the government shutdown, and then ultimately been rocketing higher. But we are well overdue for another named sell-off. I brought this up in my video earlier this week. We broke that 180 level on the SPY, 1,800, 16,000 on the Dow Jones Industrial Average. All these key figures have been broken. And so I would not be surprised to see a further pullback to this 177.50 level that we broke earlier last week. It was a key resistance line. You can see where I kept bumping up against it. It would almost just make perfect sense to pull back to this level, 177.50 on the SPY, before vaulting up back over that 180 level. So it's something to keep an eye on. Let's move to some individual stocks and ETFs. How about Apple? Apple has been a tough nut to crack, pretty much flat. But you can look at the chart itself. To me, just looks poised for a breakout. It's consolidating here. It's been a difficult trade for both out-of-the-money option call buyers and out-of-the-money option put buyers. But those selling the premium that is inherently built in to this stock is doing very well. At some point, we're going to just bust to the upside. It's going to happen quick. It's going to be furious, and it's going to be very profitable for the out-of-the-money call buyers. I'm not in the calls yet, but I could see it happening as soon as tomorrow. But I'm probably going to get into the Apple 535s on Thursday morning, and with the hope of seeing that move come to fruition. Been consolidating now for over a month. Come on already. That's the difficult part about trading stock options. You could be right about this ultimate move to the upside, but if you're not positioned for it, or you let your options expire last week or the week before, you're not in them this week, too bad for you. Let's go to Microsoft, which is dipping down to levels that I really like. I talked about this early in the week on Monday. It was downgraded. You can see these 3 beautiful candles. We're up against moving average support, but I think it moved about 36.50, 36. I said I'd be a buyer here, and I'm going to be looking at calls probably at the end of this week. We get a nice pullback. Relative strength index still not oversold, so we could see further weakness. I was anticipating a move down to 36.50 level. We could get back to about 36, fill this gap. This gap I don't think is going to get filled down to the $34 level. It's something to keep in mind here for Microsoft. I think it's going to be a very profitable move to the upside. This is going to be a $40 stock heading into 2014. And to me, look at the pullback in the whole scheme of things, not that dramatic. And it's good actually to get those overbought conditions out of the way so we can move on to higher prices for Microsoft. How about TLT, which is the 20-year bond ETF? You can see it's right up, and this blue line is significant support resistance levels. You go back from a longer term perspective, the chart still looks very bearish to me. Very bearish. It looked bearish to me back in the early to mid year as we broke lower, and I thought we were going to continue to break down. Indeed, the lack of tapering and the fact that the Federal Reserve is going to print forever is helping to keep the bond market stable somewhat. But eventually it's going to collapse here. We're going to head back to levels that we saw back in 2011. TLT is going to head back to $80. And when that does indeed happen, it's going to be very profitable for TLT put buyers. But until that time comes, we just might meander around here in the 100 to 105 to maybe $110 level. And if we do get up to about the 115 level, a beautiful pattern here, topping pattern, no matter what happens in the short run here, longer term in the next couple of years, TLT is going to plunge back. 80 as interest rates rise and bonds take a tumble. Let's go to Tesla. I was the first one to bring up the fire, Tesla, the third fire, and you can see the moving average is rolling over, although from a short-term perspective, relative strength index is starting to get in oversold territory, but from the short-term perspective, we bounced today. We're up 3.7%, and again, we're going to see a move back up to this 135 level before continuing a decline, I think, at about 110. Let's move in a couple more stocks that I'm looking at. How about Qualcomm? Qualcomm analysts are just so bullish on it. And you can see this. If you look from a shorter term perspective from the start of this month, we're flagging here. We're flagging. You can see even overall with the market falling, Qualcomm just seems to hold on. And this is a long-term chart perspective here. I'm going to bring up 2-year chart. You can see it's broke above this former resistance line that couldn't buck it in 2012. Earlier this year, finally broke through to the upside, and now just making a nice wave pattern here to the upside. And that orange line there that you can see from a long-term perspective back in the middle of 2010 is acting as resistance. So I'm expecting a pullback back again to this $67 level. If this bull flag does not come to fruition, and if we do indeed see the rest of the market fall to pieces, I think Qualcomm is one. The options are so cheaply priced because they're not anticipating a big move to the downside. But if we do see this candle we had to the upside, even if we just fill not even half of it, just a third of that candle, the 7150 options are at about 50 cents right now, the put options. And if we fill half of that, those will be a 300% gain. So it's great when you're trading stock options to find a stock that has low volatility priced in by the market that you think is going to make a big move. And that ultimately will lead to big profits like we did with Hewlett-Packard last week. Brought them up when they were 18 cents. They ultimately went over $1, 500% gain. Nobody was expecting a move to the downside except me. Anyway, all right, UPB here from optionmillionaires.com. So indeed, we could see continued weakness in the market. The overall trend remains to the upside, as I've been bringing up at optionmillionaires.com for the last couple of years. Every pullback has been a phenomenal, extravagant buying opportunity, despite what everybody says. That's got to get out of the way. Come on, what is that doing there? It's just a stray trend line. But you can look. Each of the dips have been a great buying opportunity. Each of them has except the most recent one has been a W bottom back in the late summer months. But for the most part, every single dip since 2009 has been a buying opportunity. So the trend is your friend. But we could see a pullback here. And again, the options, the VIX started to rise again. Let's look at the VXX real quick, which did a reverse split, not a forward split. But you can actually look at the action we saw intraday, some sort of topping pattern here. So we could see VXX fall, which would imply higher stock prices, but the VIX has just been beaten down just a little bit. Go to the 10-year chart. Yeah, that's just a small, oh, honey, I bought the VXX at 7,500. Obviously, it's split adjusted here, so. But anyone who bought VXX call contracts or went long VXX just got murdered. Split adjusted, they bought $7,500 worth of VXX. Back in 2009, they now have $19. Wow, what a great investment. All right, UPB here from OptionMillionaires.com. Hope everyone has a great trading session. See you in the chat room at OptionMillionaires.com and on Twitter. Goodbye.